Welcome to the Great Reboot. I'm Tori Ryden. If you're like most of us, you're checking your bank accounts daily, and those 401k stocks and other funds, oh, it's kind of scary for a lot of people right now. Warren Buffett said, and this is prior to COVID, he said, "I will tell you how to become rich. Close the doors. Be careful when others are greedy. Be greedy when others are careful." And Philip Fisher said, "The stock market is filled with individuals who know the price of everything but the value of nothing." He said, and it's a testament to the fact that investing without an education and research will ultimately lead to regrettable investment decisions. He says research is much more than just listening to popular opinion. Our guest here on the Great Reboot understands the value of understanding the value of money, as well as wise investing. Kathy Bresnan has been a financial expert for the past 30 plus years. She excels in wealth management. She's a certified financial planner with Ameriprise in New York City. And Kathy joins us now from NYC, the Big Apple. Kathy, thank you so much for joining us on the Great Reboot.
Thanks for having me, Tori.
I bet it's been just crazy busy for you. You're working from home, and kind of take me through your day. I mean, are people in a panic situation right now who you're working with?
I think that right this minute, people are less in a panic situation. I think probably in March, we were in a bit of a panic situation because everything just happened so quickly. I think a lot of times when you have market corrections, they happen over a period of months. And this particular one happened over a period of days. And, you know, really what we have here is a public health crisis. It's not really a financial crisis, but the concerns and fears, frankly, of people hit the stock market very quickly. And so that was just one more thing for people to worry about. Things have calmed down substantially since then.
I know so many people, so we'll set aside for a second, any kind of investments they have. There are a lot of people who don't have jobs right now. I mean, the unemployment rate is just sky high. And David Joy, who's a chief marketing strategist with Ameriprise Financial, said that unemployment is expected to rise to 16% from 4.4%. The numbers are already really just parading higher and higher by the day. And I think that there's going to be some more financial news and unemployment news coming out tomorrow, which is expected to not be very strong on that front. So I guess taking that's a different situation, but kind of you look at people who did not expect to be out of work. It went from kind of a furlough to a permanent, gee, your job doesn't exist anymore. And so there are people who are trying to look at this and say, well, I'm 5 years from retirement. What do I do now if that's the case? And I'm just wondering if maybe you can take us through a couple of scenarios. I know you work with, a lot of wealth management stuff, but some of those people are now worried as well, I'm sure.
Right. Well, I think, I think the unemployment numbers are going to be very high. I think that a lot of those jobs, people who are applying for unemployment insurance, are people who are in the retail sector, so who work in stores, people who work in restaurants or hospitality in any way, shape, or form. I think we all have to go under an assumption, which is if for some reason we are able to come up with a vaccine, people will go back on cruise ships, people will go back to stores, and people will go back to restaurants. But so long as the possibility of getting this disease is a possible death sentence, it's not going to happen. So you have to be careful. I don't think that this is going to be our new normal forever. So if you've been furloughed, there's a really good chance that your job will come back. And I don't really think you need to panic about that. If you had a job where, a movie theater where people were right on top of each other, I think that's going to be a tough scenario. I don't think movie theaters are not going to exist any longer. but I think, it might be like the every other seat or something like that. And if you can only fill half the theater, you probably only need half the jobs. And so that's definitely something to consider. But making the analogy, you asked me earlier about the stock market, as of today, the NASDAQ, which is sort of the tech-heavy index, it's really flat on the year, which is pretty remarkable. You look at places like China, where they had the disease, the COVID virus before us, things are really starting to come back to where they were. So I would say that that I hope that no one panicked, because if you panicked and sold everything down 30% ago, you missed the biggest market move of all time. You missed a bear market into a bull market in 1 month. And I'm not sure that I could say that's never happened before, but it happened much more quickly than I've ever seen it happen. And it might be as fast as it's ever happened. So what I would say is, don't panic. I'm gonna give you an example. We spoke a little bit about, just talking about what some opportunities are right now. And your specific question is, well, what happens if you're out of work right now? And so I want to tell people about a provision that's in the new CARES Act. And I just want, a lot of people say, oh, in the CARES Act now, you can borrow, you can take money out of your 401k for free. And I would just want everyone to know that is not true. You can have access to money in your 401k, and you do not have to pay the premature distribution penalty. So if you're young, 59 and a half, let's just call it 60 or younger, and you take money out of your IRA or your 401k, on top of the taxes you owe on that money, there's a 20% premature distribution penalty. The distribution penalty is being waived. You still owe the taxes on the money, either with next year's taxes, or you can pay it over the course of 3 years. Now, obviously, this is not an ideal situation that you tap this money, but the fact of the matter is, it is your money. And if you're having a tough time and you have no access to other monies, this might be an opportunity. And again, in the situation where it's $10,000 and that you take out, there's no penalty. And if we assume you're in a 25% tax bracket, so you owe $2,500. But
$500, yeah, that's a lot, And
it is a lot, and it's a mistake to just think, oh, it's my money, I'm going to get it. I tell people all the time, when they become retired and they start taking money out of their IRAs or their 401ks, and they say, oh my gosh, did you see that tax bill I got? And I said, well, the thing is this, the promise was always tax deferred, not tax free. Of course, there's the exception of the Roth IRA, but if you think about it, that's why you might want to have some money in a Roth IRA, because you get to take that money out tax free. But so just keep in mind that any money you take out of your qualified account, be it a 401k or an IRA, the tax is still due. So in the example where you take out $10,000 and you're in a 25% bracket, you either owe $2,500 with your 2020 taxes next year, or there is an opportunity to spread that over 3 years, which would give you about an additional $825 tax liability in each one of those next 3 years. Just consider that.
Yeah, I was talking to a guy who has, I'm not going to identify him. He's got a job that's a very good, solid job, but he also has a company. And he is so nervous right now that he said, well, I think I'm just going to wipe out my 401k. And I was like, oh, really? Are you sure? Like, is that the smartest thing to do? Because it just seems to me that I've been hearing kind of, just try not to touch that if you can. Just leave that be if you can.
When he says that, does he mean I'm just going to spend that money or put it all in cash?
I think it was more put it all in cash. And I mean, I
Right.
know, I guess for companies now we have the other SBA, programs if you can get through to somebody and actually line it up,
Right.
which has been a real problem. But I guess from that perspective, is there anything else? I mean, you've got the SBA. Are there any other kind of companies or kind of angel investors who are out there who might say, you know what, we're here and we planned for this? I mean, is that something that exists?
Um, I'm sure it does. I think it would be difficult to find that.
Especially
They're
right now, right?
correct. There's the SBA loans, but there's also the PPP, which is the Payroll Protection Program. That's the program that I'm sure a lot of people heard about that you couldn't get through to that either. And that is again, essentially the Payroll Protection Program is essentially a loan where, for all intent, it gives you about 2.5 times your payroll. That's what it does. Anecdotally, I've heard that you're much more likely to get that through a community bank than a big bank like a Citibank or a JP Morgan. And of that 2.5 times your payroll, the two part, the 200% of it has to actually go to paying salaries. And then the balance can go to paying your utilities or your rent or something like that.
So basically it would be like 2 months then. You could float people along for about 2 months.
And that's exactly the intention. The intention, and there's so many programs going on, Tori. Like, I think a lot of people, like, you look at this unemployment number and people are upset about it, but a lot of people were sort of told, we're going to furlough you for 2 months and bring you back. Each state runs their own unemployment program. But I believe, and again, I'm not like an expert on this, but again, anecdotally, it seems like the government is giving people $600 extra. And to some people, that's a lot of money. And but the intention of the PPP, the Payroll Protection Program, was to pay people in that way, meaning so that they did not have to go on unemployment.
Yeah.
So, there are so many programs out there depending on what kind of business you are. I mean, if you're in the healthcare sector, there's some kinds of direct relief there. There's some relief for not-for-profits. And I'm sure all this information is out there in the universe.
It is, I think, yeah. And I want to say thank you for even commenting on all of this, because this is not even, I mean, I appreciate your weighing in on this, but I do want to be fair to you and keep it in your lane. And I want to ask you about, when people are starting, things are kind of sort of starting to get back, kind of sort of. And I'm wondering, what are you advising me now? It's kind of a different world, isn't it? And who would have ever thought, wow, investing in PPEs, the personal protection, equipment, wow, that might be a great thing to invest in. And I guess I'm wondering, what are you seeing as upcoming really smart investments for people that, have things shifted?
Yeah, definitely. I think definitely the work from home world, whether it's Zoom or Microsoft or, any of these ServiceNow, any of these companies that kind of network your team are doing phenomenally, like, all-time highs. So really, I don't think I fully answered your question about the gentleman that wants to get out of his 401k.
Yeah.
I think that the market has come back enough from its lows that it is a great opportunity to sit back and say, wow, my risk tolerance is not what I thought it was. And I'm gonna take a look at that, and maybe I need to be 25% in cash and spread the money in different kinds of asset classes, because wow, I was really freaked out when it went down that far. Mm-hmm. Like I said, here's the thing. Even if you're 65, there's a great chance you're going to live to be 85. That's 20 years.
Yeah.
You can't really afford for your money not to grow over those years. So to your question, think about what's next. So is Tesla next? Like, I don't know, but I do seem to think that Tesla is more next than Ford, because I just think that's the direction that we're going in. I do seem to think that, Zoom might be more next than, I don't know, a company that made telecom equipment for an entire floor of a business.
Right.
I think you need to, I hear, again, sort of anecdotally, that people are making like different kinds of portfolios, right? Like, I think that we were going in this direction anyway. I think we just were pushed, through a shooting tunnel faster to adopt and adapt to this new world. Those companies will all do phenomenally. If so many people signed up for Zoom, which we're speaking on right now, and they get it for free. I had always had a subscription based for work. Well, let me tell you, you can be thinking in this way. What if this does come back in the fall? What would you be thinking about? In the beginning, companies like Procter & Gamble and Kimberly-Clark did so well because everybody was hoarding toilet paper. I remember hearing that the CEO of Walmart was on TV, and he said, every week we sell enough rolls of toilet paper for every American to have a roll. Like, every week.
Wow.
He said, I never knew that this was going to be like the great American insecurity. And, recently you started hearing about a number of cases, of concentrated cases of the COVID-19 in meatpacking plants. Well, these companies, like a Tyson Chicken, it trades publicly. And that was a hit to that. And then the stores were not able to get it. But you know who stepped up to the plate? Beyond Meat. Beyond Meat says, oh, we don't have a problem with our supply chain at all. So these stores like a Kroger or whatever would say, well, we can only let you take two packages of meat, whatever they are, but we have an unlimited supply of Beyond Meat. And, we just forged a partnership with them, and we're going to have it here, and it's a protein, and you can get it and you can buy it. So
for people who don't know what Beyond Meat is, it's a meat alternative. It's vegetarian. And so, it purports to taste just like a hamburger on the grill, but you don't have the cow. Correct.
And you don't have the meat plant, and you don't have the distribution. So I think that there are opportunities. There are always opportunities. Another example of something that was really has had a very hard time through this virus is oil stocks. I mean, can you imagine? I live in New York City, so I don't drive much, but almost everybody has told me that they have not filled up their gas tank in 2.5 months. And if they did, they just, put $10 or $20 in there to top it off because it made them feel good.
Guess how much gas costs a gallon in Maine? $1.76 a gallon.
$1.76. Yeah. Wow.
So it's costing me about $15 to fill up a tank. You feel like it's a throwback to the 1970s. I mean, it's been a long time. Let me ask you this: are you seeing a trend? Because since COVID, we saw a gaping hole, obviously, in many different places in which we were not prepared for this. Not only personally, but nationally, we clearly did not have enough PPE. And so I'm wondering, we've had different levels of nationalism, good, bad, or indifferent, and we're not going to get into a political conversation about that. But we have seen a lot of people saying, look, we've got to look inward now, and we've got to stop relying on, China, et cetera, for every single thing. And so there are manufacturing plants that had long ago died that are motoring back up again, and they're making PPEs and different items. But are we going to see kind of that higher investment, do you think, in American goods than in Chinese and international goods?
Well, I definitely think we need, as a country, to upgrade our supply chain. I think we made a mistake. We wanted, everybody loves a bargain. And frankly, an American worker makes 10 times, maybe 20 times. I don't really know what the number is, what a Chinese, it was cheaper to have it made over there and then be shipped here. So I definitely think we're going to see that, not just on the PPE, but, honestly, a lot of our drugs were made over there too. So let's say we come up with the, with the vaccine.
Right.
I don't even know if we have the facilities in this country to produce it.
In the quantity that we need.
Correct.
Yeah. Mm-hmm.
So, PPE, I mean, I don't know, when I thought about that, the first thing I thought about was the company 3M.
Mm-hmm.
They make the masks and they make the gowns, but they also do a lot of other things. So you have to be careful. It doesn't make it the no-brainer investment there. But it seems like consumers continue to buy things like food. I'll tell you another one that has done really great in this, and really the demise of this company was highly touted going into the beginning of this year, Campbell's Soup. I mean, I'm telling you, you couldn't find a can of Campbell's Soup.
Mm-hmm. You're right.
And they make a lot of other products too, they own Pepperidge Farm, I believe. And so it's sort of interesting, right? It's hard, they would say, oh, people only want to shop on the edges, meaning like the fresh meats and cheeses and the vegetables. None of the millennials will shop in those aisles. Well, you couldn't find, I mean, I thought it was hilarious that you could not find a can of Campbell's Soup.
Yeah. Things have changed. I mean, you never could have, prepared for this. And like you said, Campbell's Soup almost going down. Saved by COVID.
Right.
Enough.
You could make, I just feel like you could make a list, right? A list if there's a vaccine, what's going to happen next? A list if this comes back in the fall, what's going to happen next? I think a list if this just drags on for 3 years, what that's going to mean, just from an investment point of view. There's an opportunity somewhere, but the question is, what is going to happen next?
So before we let you go, I was just wondering if you can give us just a couple of really smart strategies that are kind of easier that people could kind of take a look at as they're, like you just said, this could be something we're dealing with for 3 years, but what can people do today to kind of just take some time out of their day and strategize on their own, on their own wealth strategy, their own financial forecast?
So I think it's an opportunity. The fact that the market is not where it was, down 30%, free falling in a panic, it is an opportunity for you to reassess what your risk tolerance is. And if you think, and you have to stick to that. You can't just say, if the market goes up 5% next week, oh, I made a mistake. You have to say, oh, I made a decision based on my risk tolerance. Let's just go through some of the asset classes. Cash, it earns nothing. If you keep all your money in cash, you are, for all intent and purposes, moving backwards, because the cost of life is going up anywhere from 2 to 4% every year. So yeah, you might still see the same number on your statement, but you're actually moving backwards. So be very careful about that. I'm a fan of having some cash to access, but not of putting all of your 401k in cash. I think that, bonds might be an alternative for some people, but bond rates are also very low and possibly going to stay very low for a long time. You have international stocks. Some would argue that maybe some overseas countries are not in as good a shape as the United States is. I think, what a lot of people are saying is, back to the blue chips. And that doesn't mean just IBM or McDonald's. It means there's a new generation of technology blue chips. And I think being involved, and that makes sense. I have a couple of ideas that I think might not work out as well as they've worked out for people in these last years. I think when you invest in real estate, in in a 401k or an investment account, it's often called a REIT, REIT, for Real Estate Investment Trust. So I'm here in New York City. I work in an office building, although I'm here in my apartment. I don't know if I'm ever going back there again. I have friends that commute into the city, and they don't know if they're ever going back there again. And so when our leases are up and we're not contractually meant to pay these people, we're not going to. And I'm sure they always thought that they could get someone else to fill that space, but maybe they won't be able to. But the people who own the building still have a mortgage that they have to pay. What's going to happen there? So if you have a large exposure to REITs because it paid a good dividend, take a look at that and see how you feel about it. I would also say a lot of times people have a friend or whatever that tells them to buy a stock because it has a very high dividend yield. Right now, that might be a bank stock. It might be an oil stock. Let's be honest here. Anything that's too good to be true is probably too good to be true.
It really is.
There's
Right.
a very, very good chance that that dividend is going to be cut. So don't be married to it just because oh, look, an 8% dividend.
Wow.
I'll
Right.
give you an example. This week, the Walt Disney Company came out and said, we are not going to pay our dividend.
And that's a big blow to a lot of people who are hoping for that and counting on it. Yeah. All right. One last question. Do you ever advise, you always hear this, people kind of in the margins will say, invest in gold. Is that ever?
I think it's probably okay to have a little bit of gold in your portfolio.
Just not all.
10%.
All right.
I mean, honestly, if someone came to me with a gold coin, I'd be like, what do you want me to do with this?
I know.
It is an inflation hedge. It is something you can hold in your hand. I'm not opposed to owning some gold, but I wouldn't own all of it. That's for sure.
So what I've gotten out of this is anybody who's stockpiling cash under their mattress, time to get that out of the mattress and get it someplace that's actually earning them money, or else they're going backwards. Correct?
Correct.
Yeah. Well, Kathy Bresnan, financial expert, financial planner with the Ameriprise, I want to thank you so much for sharing all of your important knowledge and ideas for people as they're navigating a whole new financial place. It seems to be changing every day, but thank you so much for joining us from New York City, and I wish you all the best, Kath.
It's great to be with you, Tori, and I hope all your listeners are safe. And as you say, we're all going to just move forward.